Welcome back, fellas. I hope all of you are doing well. Solomon Qureshi here, your host, back with some business term definitions. So, communication across a company is hard enough, let alone when you feel lost from the terms used by your business savvy colleagues. With this glossary, you have a reference that will serve you to understand basic of a company. These 20 basic terminologies are relevant to any professional field, by the way. So whether you have already started your job, getting ready to go for an interview or a coffee chat, you want to know these terms like back of your hand. So with this, I'll move on. Balance sheet. The balance sheet documents a company's financial health at a specific point in time, usually at the end of a quarter or a financial year. The balance sheet includes three basic components. First one is assets, second one is liabilities, and the third one is equity. And this is the equation of accounting that you see on your screen. The left-hand side leaves you with what you own, whereas the right-hand side shows you what you owe. Your asset value should be equal to your liabilities and equity. Then it comes to assets. What are assets? Assets are resources that a business controls, in which the owner expects assets to generate future cash flow. Examples includes inventory, equipment, land, warehouses, etc., etc. Liabilities. Liabilities are basically debts, usually sum of money that a business owes to another entity. For example, includes expenses payable to supplier, accounts payable, or business loans, etc. Equity. Shareholders' equity, or SE, tells you a company's net value. If liquidating assets, paying off debts, to calculate shareholders' equity, subtract total liabilities from assets. This is going to be the equation. Net income. The net income shows the business performance during a specific period, such as throughout the quarter or a financial year. Focusing on revenue and expenses, the income statement depicts a company's profit and loss. Revenue. Revenue refers to income generated from a business operation or activities. One way to calculate revenue is by multiplying the price of an item by the quantity sold. Very simple. Expenses. Expense refers to money spent on utilities, salaries, raw materials, and other items that a company incurs operating a business. Net loss. Using the profit equation, you can calculate the business's net loss, or when the total expenses exceed the total revenue and the difference is negative. Cash flow statement. A cash flow statement measures the cash generated inflow or used outflow by a company in a given period. Classify cash flow under operating, investing, or financial activities. Profit margin. Three types of profit margins are there. Number one, gross profit, net profit, and operating profit margin as well. So calculate your profit margin by dividing profit by revenue. Profit margins show a company's growth potential and answer how much of each dollar of sale generates into profit. So for example, the equation will be profit margin is equal to profit divided by revenue multiplied by 100%. More revenue does not always translate, by the way, to higher margins or more profit kept from the sales. Return on investment, or ROI. ROI is a ratio measuring performance efficiency relating to how much a company spent on investment. Calculate ROI by dividing net profit from investment costs. Variable costs. Variable costs change proportionally to production. So for example, the cost of raw material increases with the number of units purchased. fixed costs. Unlike variable costs, fixed costs stays the same regardless of changes in the production. So for example, a company pays the same amount in monthly rent. That's like this. Cash flow. Cash flow is measure of amount cash generated or lost through a business operation. It's different than net profit, as net profit includes non-cash expenses such as depreciation, etc., and excludes some uses of cash such as capital expenditure for new equipment or repayment of outstanding debts. Profit, also known as net income or the bottom line in some business terminologies. Your profit shows the difference between what a business earns and spends. Calculate profit earned by subtracting total expenses from total revenue. So profit is equal to total revenue minus total expenses. Business to business, this is also very common terminology. Business to business transactions take place when a company sells goods to another company or services to another company. So between company to a company or business to a business. Business to customer means business transactions that occur when a company sells goods or services to an end user. Best practice is also a very general terminology. Best practices are accepted as standard methods for executing a task for how they most effectively produce results. That is called best practice. Decks. These are also very common. This term is commonly used to describe a PowerPoint presentation. You could think of it as a deck, the PowerPoint slides. Recently, some of the Power BI dashboards are also referred to decks. However, their download documentation and then review and visitation of those documentation is also called deck reviews. And last but not the least, deliverables. A deliverable is a final product given to a client at the end of a project. A deliverable can include decks, researches, PowerPoint, financial models, even some cases finalized Power BI decks, etc. as well. I hope you enjoyed it, guys. Do share your comments in the comment section for more business terminologies. What are your favorite business terminologies? Do share with me your feedback. I look forward to speak to you again. Until then, stay safe and take care of yourself. Bye-bye.